Imagine for a moment that you're holding a simple paper bill, maybe $1, maybe something else. It's thin. It weighs almost nothing. It's fragile enough to tear in your pocket. And yet, this tiny rectangle of printed cotton has more power over human behavior than almost any invention in the last 1,000 years. Wars have been fought over it. Empires have risen and collapsed because of it. And every modern economy, every business, every bank, every government depends on the trust people place in it. Paper money isn't just a financial tool. It's one of the greatest psychological technologies ever created. It works not because it's valuable, but because billions of people believe it is. And that single idea value created by belief changed human history more profoundly than gunpowder, steam engines, or even electricity. But the story of paper money didn't start with trust. It started with a problem. Imagine ancient merchants trying to move wealth across long distances. If you were a trader in early civilizations, China, Mesopotamia, the Mediterranean, your fortune was measured in metal, copper, silver, gold. These metals were heavy. They were dangerous to transport. A long journey with a chest of gold was basically an invitation for thieves, kidnappers, and rival kingdoms. Even if you survived the trip, trading large amounts was painfully inconvenient. Economies grew slowly because money itself was slow. People needed something lighter, safer, and easier to move. And that pressure, the pressure of commerce, created one of humanity's boldest ideas: money you could carry without actually carrying any metal at all. The first people to truly solve this problem were the Chinese, nearly 1,000 years before Europe would even consider the idea. Paper money began in the Tang Dynasty and exploded during the Song Dynasty. At first, merchants exchanged heavy coins for paper receipts issued by trustworthy shops or local government offices. These receipts weren't money, not yet, but they acted like money. If a merchant could trade a piece of paper for goods, why haul bags of bronze coins across a dangerous mountain pass? Slowly, these receipts became more popular than the coins themselves. And once governments realized people trusted the paper more than the metal, they took the next step. They printed their own official paper currency. This was a turning point in human history. Before this moment, wealth was always tied to something physical: metal, land, livestock. But the invention of official paper money introduced a revolutionary concept: value based on authority and belief, not physical substance. And once this idea entered the world, there was no going back. The Song Dynasty printed notes to fund military campaigns, infrastructure, and administration. For the first time, a government didn't need to dig more metal out of the ground to expand the money supply. They just needed ink, paper, and confidence. That combination would reshape civilizations for the next millennium. But this new technology wasn't perfect. The danger of paper money is the same as its power. It's easy to create. Too easy. As paper money spread across China, dynasties rose and fell on the strength of their printing policies. When governments printed too much, inflation followed. When they printed too little, economies stagnated. The balance was delicate, and mistakes were catastrophic. The Yuan dynasty printed so much currency that prices soared and public trust collapsed. The Ming dynasty tried to fix the problem by printing even more, which only made things worse. By the time Europe first encountered paper money through Marco Polo's writings, it seemed like a bizarre, magical system where emperors made money from bark. Europeans didn't adopt the idea for centuries, partly because they didn't believe it could work. And yet, the idea of paper money was too powerful to ignore. As Europe expanded trade, built new empires, and developed more complex financial systems, they ran into the same problems ancient Chinese merchants faced. Coins were heavy. Transport was risky. Banks began issuing paper receipts for gold deposits. These receipts weren't meant to be currency. They were simply claims on metals stored in vaults. But people started trading the receipts directly, just like the merchants of the Song Dynasty. Once again, paper became more convenient than the metal it represented. But the true revolution began in the 20th century, when paper money detached completely from gold. For most of history, paper money was tied to something physical, usually gold or silver. You could trade a note for metal, and that promise was what made people trust the paper. But gold-backed money created limitations. Governments could only create as much money as they had metal in reserve. During crises, this constraint could collapse entire economies. After multiple economic depressions, wars, and financial panics, nations began abandoning the gold standard. In 1971, the United States made the final decisive break. The dollar, like most currencies today, became pure fiat money. That means it has value, not because it can be exchanged for something physical, but because society collectively agrees it has value. The idea that began in ancient China had finally reached its most pure, most powerful form. Fiat money is the ultimate expression of trust. It requires confidence in governments, in institutions, in stability, and when that trust breaks, currencies collapse. History is filled with examples. Hyperinflation in Weimar Germany, Zimbabwe's trillion-dollar notes, Venezuela's currency crisis. Paper money can fuel prosperity, but it can also destroy savings, destabilize economies, and wipe out entire classes of people almost overnight. Its power is extraordinary, but it is never guaranteed. Yet, despite all the risks, fiat money has become the backbone of the modern world. Every paycheck, every online purchase, every loan, every tax payment, every investment portfolio, all of it exists because paper money evolved into the digital units that now run the global economy. In a very real sense, money isn't physical anymore. It's information, numbers and databases, signals moving across wires and servers. When you tap your phone to buy something, you're using the descendant of an invention that began with handwritten notes in medieval China. Paper money didn't just change how we trade, it changed how we think about value, debt, wealth, and possibility. And here's the most fascinating part. Paper money is disappearing, yet its core idea is stronger than ever. We're entering a world where physical cash is becoming rare. Instead, digital currencies, central bank digital money, and even decentralized systems like cryptocurrencies are pushing the evolution of money into new territory. In some countries, almost every purchase is done electronically. In others, digital payment apps have replaced wallets entirely. But all of these systems, from mobile banking to Bitcoin, are built on the same fundamental concept introduced by early paper money: the idea that value can exist independently of physical material. That trust, not gold, is the foundation of a functioning economy. Without paper money, modern civilization as we know it would collapse instantly. Global trade would freeze. Governments would fail. Banks would crumble. The entire financial system would revert to something resembling the Middle Ages. Paper money allowed humanity to leap forward, building cities, technologies, industries, and networks that never could have existed in a world limited by metal coins. It allowed societies to borrow from the future, invest today, and grow at unprecedented speed. The story of paper money is really a story about belief. It's about how millions, and then billions, of people agreed to treat something worthless as if it were priceless, and in doing so, built the world we live in. It's about how trust can become power, how ideas can become wealth, and how the simplest invention can reshape centuries of human progress. Paper money isn't just a financial tool. It is a psychological contract, a social glue, and the foundation of modern economic life. It may be fragile in your hand, but its impact is stronger than any empire forged by swords or armies. And even though money is becoming digital, even though physical bills may one day disappear, the invention of paper money remains the turning point, the moment when humans realize that value doesn't live in metal or in objects, or even in paper. It lives in us, in our agreements, in our trust, in our shared belief. That is why paper money is the most important financial invention in human history. And understanding it is the key to understanding the past, the present, and the future of global power.